Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Tuesday, July 5th. It is 6:17 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, not a lot going on. Bitcoin is up about 1.75%. Equities flopping around between minus 0.3 and minus 0.5%. Not a lot going on. Copper is down 2.5%, so the bear keeps active there. Oil and nat gas are flat. Moving on to macro, we've got auto sales this morning, factory orders, noises coming out of DC are leading people to believe President Biden is going to relax or eliminate tariffs on certain Chinese manufactured items. We'll have to see which ones and to what extent. There may be a little pop on that. And the big thing is coming up is tomorrow, the FOMC minutes at 2 p.m. So that'll probably be closely watched. If you go to the blog site, you can see that on the earnings front, very little this week. Nothing today, nothing tomorrow, I believe, and just a few on Thursday and Friday of some minor names. So hopefully you had a really nice 3-day holiday weekend, and you had a chance to kind of, well, number one, recharge your batteries with friends and family, but also, number two, do a little reflection on how the first half went. Maybe identify some actionable things in your trading that you want to focus on the second half to kind of tighten things up. And if you were, if the first half was frustrating to you, hopefully identify a few things to work on in the second half so we can make some improvement. Okay, so let's dive into the charts. SPY daily, we're down below the daily downtrend line, forming somewhat of a wedge. We've come off the lows at 365, put in a little bounce, got rejected. Still basically below all the moving averages. I think today, if things seem firm at the open, active traders can be long against this 377.5 type area, and then you've got targets above at 385, 390, and then you run into the downtrend line more or less around 395. If we zoom down into the 60-minute chart, you can see that we've got an open gap below. We've essentially closed a number of open gaps that were above, and we're right here at a resistance level coming off of these two higher volume over price bars. Now, from the 60-minute chart, you see that we've got a downtrend line coming off the most recent highs, picking off this high. And so I think you'll have to decide, well, you should know already, what time frame you're trading. If you're on a daily type swing trading time frame, I would wait for the breakout of the downtrend line on the daily chart as an entry point, because that's going to open up the door for a run up towards this resistance area between 410 and 415, where we ran into trouble a couple of weeks ago that we could not get through. So I would imagine that if we broke out above the daily downtrend line, filled this gap, then we'd have a shot to get into this 410, 415 area. And then if there's, a summer rally, July rally, if you will, an opportunity to break out above and come up, tag the 200, and possibly get a move towards 430, 435. But that's all looking ahead. So going back to the 60-minute chart, if you're on a low time frame and you get, an entry back around 377.50, I think that's where price is trading now in the pre-market. You could see a run up towards 385 before it hit the 60-minute downtrend line, and then you can see you've got some overhead resistance coming in about 387, where these next two largish volume over price bars hit. On the downside, keep in mind we've got a sizable open gap here, and I would definitely have the prior lows down here around 362.5 marked on your charts, because any break of that opens up the door for more selling. Moving on to the Qs, you can see the daily downtrend line here is a lot closer in relative terms than it is on SPY. So, but that being said, price still remains below all of the moving averages, and on the face of that, it's bearish. On a reclaim of 285, I think you can be long, looking for a move to 290. I think that would be a really nice entry point for daily swing traders. If we were to break out above that, I would be getting long and then looking for a tag of the declining 50 EMA. And if that gets taken out, potentially a run up to fill this gap and then come into this big resistance zone that we have at 317 to 322. So for today, I would keep 385 in focus and 290. Really here on the 60-minute chart of the Qs, you see the same kind of lines, or I should say levels lining up. And here's where I have the 60-minute downtrend line coming just below that 290 level that we had on the previous chart on the daily. So if you're in lower time frames, the hourly or the 15-minute or whatever, just realize if you get a push into 287, 288, 289, that is where the daily downtrend line comes into play. And if I were long and got a good morning entry and we rallied that far, I would certainly be rolling up my strikes, going to the bank, and if you want to stay long, that's fine. Or if you want to take it off and wait for the downtrend line on the daily to crack, then you can re-enter on a much with higher conviction, knowing that you've taken out the daily downtrend line. And what you always want to see when you're trading the Qs, even though you may not be trading SPY, it's a good idea to keep your eye on it. Why? Because oftentimes if SPY runs into a problem, i.e. gets rejected at a key level, then that will stymie the advance of the Qs. So what you really want to see is a double breakout where the Qs break out of their downtrend resistance line along with SPY. So keep those two charts in conjunction with one another. Know the key levels, even if you're trading, like I say, one or the other. IWM, pretty darn weak, below all the moving averages, still kind of chopping around down here at the low end of the range. 170 seems to be a nice pivot on IWM. I think you can be long against 170, looking for 174 and then 178, and then we've got a downtrend line here coming in about 180. So those are the levels I'd be looking for there. If we zoom down to the 60-minute chart, you can see a recapture here at 172 and a quarter, 172.50 would open the door to 174, and then potentially 176.50. A rejection brings it back towards 169. And last week, I kind of hypothesized that this move here, along with this move here, looked like, you know, an A, B, C, D type move. You know, impulsive leg down, bear flag break. If price moves higher into this zone up here, it's really going to lose that bear flag look, that classic, you know, breakdown, bear flag breakdown. If it comes up here, it's really not going to have that classic look, and I think for the most part it would invalidate that idea. Moving on to FATMAAN. Meta 60-minute chart. This gap here has been filled, but I just left it in as a reference point. You can see that we've got a pretty nice downtrend line on the 60-minute chart, and I would be keying in on 163 as a breakout area, and then you've got a high volume over price bar, and you can see all the traffic along this 165 line. If price can break 165, I think it's got some running room up to 170, and then you've got an open gap up here yet to fill, and then a really, really big level would be this 177 level. So we'll just have to see if price can do it. Notice the double bottom. You had a bottom here, came back down to revalidate it here with a slight bit of bullish divergence on the RSI and the PPO indicators. I would definitely have this low down here at 156 marked on your chart. If this thing could come up to the downtrend line and roll over and break, that would bring in more sellers, I would imagine, at 156 if that were to fail. Moving on to Apple. Again, the key features are the downtrend line on the 60. If price can break above 141, I think it's got a good chance to really get some running room going towards 142.5, 145, and then 147. I think you can use this, you can round it off to 139, 138.75. I don't think that's going to be a heck of a difference. If it opens down this morning, I think 137 would be a good entry point, or even 136. You've got this high volume over price bar here that should act as good support between 137 and 136. So I think that's the key level that price needs to hold. And if things wobble and roll over, I think that the line that has to hold is 135. Why? You've got support here, a bunch of support here, and resistance here. And it would drop out of this more or less value range between 135 and let's call it 139. So I think on the short side, if 135 were to break, probably come down here and fill this gap, and I would have your 129.50 marked on your chart as far as the prior low is concerned. Tesla has been in this consolidation pattern for 3 days, toggling between 665 and 690 until we've got a breakout or a breakdown. You're pretty much confined to trying to trade in this range here. And you can do it. That's, what is that? $25 range from 665 to 690. If you're a sharpshooter and you're on low time frames, you can certainly do that. Otherwise, I'd be looking for either a breakout above 690, where you could come up to 720, or a breakdown below 665, where you've got a gap yet to fill, and then have your prior low down here. Well, there was a low at 630 most recently, but we know back in the charts there was a low at 620. I would just have 620 marked in your charts for downside support at the prior low. Moving on to Microsoft. We're trying to work our way up to the top of value, which is, you can see this block here of volume over price bars that runs from 253 up to 281.50. I think if you get a breakout there, good chance that you can go up to these prior highs at 268. I would certainly not want to see 253 break if I was a bull, because then that would open up a downside move to fill up this gap and probably come down here into the mid 240s and potentially back down to the prior lows at 242 on any kind of downside type of move. Looking at the indicators, they are improving. You've got PPO trying to go positive, and you've got RSI that has broken above 50, which are supporting for a move higher. So I would be focused in on 259 as a pivot point for today, with a goal of getting up to 261.50 and then seeing what happens there. Amazon. We hypothesized this head and shoulders type top. We broke out from that nice textbook pattern and we've moved up to the high volume over price bar here at 110. I think that provides a very nice, clear, nothing's easy, so I won't describe it as easy, but I think it's a very clean location on the chart. If you want to take a long at 110, then look for 112.50, and then look for 115. Then the prior high comes in around 117, and you've got downside levels that are pretty clean as well if things roll over. But you'll notice off of this low, we did have positive divergence. So maybe this head and shoulders structure just won't play out as we thought it might. And you know what? That happens at times. Google 60-minute. We've got a series of higher lows, and we've got some equal highs up here at 2370. I think here this morning, if things look strong, you can get long above 2175, and then you can look for 2200, and then 2220, where we've got this open gap left to fill. On the downside, I really wouldn't want to see 2120 break. I don't think there's enough here to stop it on a down move. I think if it broke 2120, you'd come back here to 2060 to revalidate this low back here. Netflix. We're right here at this large volume over price bar, biggest on the chart. I think it's got a clear 182 to give you a path up towards this downtrend line that would probably come in around 185, 186. This gap has been all but filled. You see maybe a few pennies right at the top, but I did leave it in just as a reference point. You'll probably see muscle memory come in right at the bottom of that prior gap because why? Well, price tends to remember those gap locations even after they're filled, and you've also got the second highest volume over price bar coming in right at that level. So I'd expect at least a hesitation there at that level. And, you know, if it jumps up, or if you decide, you know what, I don't want to mess with any longs below trend, you can set your alarm at 186, and then if you get a break above, then you can get long looking for 190, 192.50, 194, and potentially 202. So you can try to play it that way if you care to. Semiconductors turned out to be a nice trade for us last week. We got rejected at the 60-minute downtrend line, came down. We had a gap down on when was that? Middle of last week. Then we came into Thursday, had this action where price rallied, then faded back to 202, and then we had a trade idea to get short in anticipation of Micron's earnings Thursday night, and then it gapped down and ended up being a good trade. Spent some time down here at 193, 193.50. If you're not in that trade and there's continued weakness there, I think you can get short below the prior low. Just keep in mind that there is a open gap here that I didn't mark that would start at 200.83. And so be on the lookout for, remember that classic move, breakdown, back test, and then fail. So if you're not in it, and today is a green day, and price comes up to test 202 and either hesitates or fails, that gives you a really nice short entry point on SMH, and then you can set a stop just above in case it wants to come up here, fill this open gap, and come back up to the trend line. Quickly on ARKF, didn't do a lot over the last few days. I think you can stay long against 1575 and look for 1650. Anything below that would open up the door to 1525 and then 1475 where you had the prior low. ARKK made a run at this gap, didn't quite fill it, came back up. I think your pivot point here is 41.50. If price can take that out, I think that opens the door to 43.50, which would be a nice trade. That's $2. And then your target above that is this prior high up near 45.50. So if things get bullish over the next couple of days, I would definitely watch ARKK and a move above 41.75. Want to show you some potential trade setups now. I've been watching ITB really closely. Really, I mean, I've not figured it out. Well, figured out the charts, but I haven't made any money. Trying to get a short that works more than a day or two. Here we've got a breakdown which found the prior low, where it bounced, came back up to the top of the box. That's another example of that technical analysis axiom. When you recapture a prior trading range, the target is the far end of the range, and that's what happened here. We broke below, we recaptured it, went up to the top of the box, then it got rejected, broke the prior low, which brought in more sellers, but then they bought it back up for a retest of 54.50. So now we've got that classic breakdown back test. And so what happens here? I would be watching that closely. Right there, I mean, right here, right now, is an objective short against 54.50 with a stop just above. If you take that position and you get stopped out, I mean, that's trading. Otherwise, I would expect this to roll over and come back down. Whether that's today or in days ahead, couldn't tell you. Like I said, it's been a tough little trade to make money on. But you can see the pronounced down. The prevailing trend is down, and unless you think housing is going to make a big resurgence, then I think you got to lean to the downside. And every trader faces this at one time or another. The frustration level, you've been trying. You keep getting stopped. At some point, I think it's fine to put it in the too hard pile, right? For whatever reason, can't really just get it to work, whether it doesn't really adhere to the technicals or for whatever reason. Because we've got interest rates changing by the hour. And so if interest rates are falling, that means mortgage rates are falling, which tends to lift housing stocks. So probably an interest rate sensitive type of a play as well. But like I say, you got to lean to the downside on this thing because it is in a pronounced downtrend. So there's a potential idea for you. I really like the way XBI, the small cap biotech ETF, has been acting. We had this double bottom low with bullish divergence. We caught a lot of this move here off of that low. We ended up getting out near the highs. We might have been like 76 when we got out. Found some support at 73 and then had a strong day on Friday, up 3%. So we're right back up near the top of this downtrend line. And I did some relative performance work over the weekend that showed that XBI is one of the leading sectors within healthcare, which is also one of the leading sectors within the SPDR sector groupings. So I would keep this downtrend line in focus. If we got a breakout here and then recaptured 80, 81, where these prior lows happened, I think you got a good chance of coming up to 90, where these high volume over price bars are, and potentially a touch of the 200 at 92.5. I really like this for a longer term swing trade if price can break above the daily downtrend line, which should be pretty darn accurate. We've got 3 touch points, start here and then here. And you can see that on a measured move basis, this double bottom projects up towards 85. So a breakout above the downtrend line would really bode well for at least that level being achieved. And so on this move, if you get a breakout today, I would just look out 2 weeks to the July 15th expiration. I think if this downtrend line gets broken, give it 2 weeks to run, see what happens, and then if things move along, we can always roll up our stops and our strikes or buy more time if it looks like this thing is really starting to develop into something. IBB, I would put in the same exact camp. Nice, clear downtrend line, double bottom, right up to resistance. I think on a break above 120, you can be long IBB, and really from here, look for a move up to 130, 132.5, where it will run into the 200-day moving average. I would also take note of this void in the chart. Back here, you can see we're definitely in a range of value. You can see the top of value coming in here at 133. So that would be a next big level. Take out the 200, take out the top end of value at 133, and then you got a lot of running room between 133 and 145. So if this thing and the general market are strong, I really like this in conjunction with that XBI trade. And then let's wrap up with XLV. We had caught a decent part of this move here, coming out of this bear trap on a reclaim of the bottom of the box. We got out right in here as it reached 129.50, more or less. Spent a few days consolidating, and now we're right back up to the downtrend line and the convergence of all these moving averages right in this congestion area. Now we closed right on the line, 129.68. Depending on where we open and what's going on, I like being long XLV above 129.50, 130, however fine you want to get it, or when you can get it, depending on how things open. I think your first target is going to be 132, and then the top of the box at 134. And then if all the stars align, a breakout above 134 would target 140 back up at these highs. And notice that above the box, the volume over price resistance really, really drops off. So XBI, IBB, and XLV are some of the strongest charts out there, especially given where price is in regards to the daily downtrend line. We talked about Jinko Solar still testing this 70 range. I would certainly have an alarm there on Jinko Solar at 70 to go long on a breakout that would target 80. I like that trade. KWeb, the China ETF that has Baba and JD and all those names in there, I think you can be long against 32 with a target of 36 at the 200, and then this high volume over price bar up near 38. And if you got the email yesterday on the Weekend Navigator, China has really been bucking the world trend, and its market looks, about the best of the global markets that are out there. I'm not sure that it can sustain that, but you'd see that in price, right? We don't have to hypothesize. If KWeb were to roll over, and lose 32, I would just adhere to your stops and just, get out of the trade and reassess after that. But as long as it holds 32, the door is open towards 36 and then 38. Let's wrap it up there. If you're new to the channel, thank you so much for spending time with me this morning. I do my best each and every day to set you up with objective levels to trade against, whether you're an active trader or a daily swing trader. Set you up with a plan where you can devote most of your time on execution. If that appeals to you, please hit the subscribe button and the alarm bell. Give me a thumbs up. That always is nice and helpful. Go over to the show notes and you'll find a link to the blog site where you can drop in your email address, and then morning, noon, night, weekends, whenever I've got a thought on the market, I will shoot it out to you, and then you won't have to hunt for the content. So, and certainly thanks to all the regulars who continue to stick with me. I hope your trading's going well, and I'm looking forward to some good trading in the second half of this year. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.